Hi, welcome to Market Alert for Monday, the 21st of October 2019. So the question is, why is Bitcoin price going up? Four indicators suggest a potential bottom. I'm not going to go through these indicators. There's only one in there that I would actually look at, and that's the one that we have in the daily chart. And the reason for this article is that yesterday, as you can see in the 15-minute, prices moved higher. But just before we get to this, let me just show you what I mean about the main indicator, and that is support. This is real because we can see where prices have found support, and the key area has been this 7,800, and the market has rallied off this from Friday when we saw the market move lower. Saturday we have an inside bar, and then yesterday, as can be seen by the 15-minute chart, late afternoon the market moved higher as it closed above the 200 moving average there. You can see the black line running through the buy signal there, and then prices moving to the upside. I didn't take the trade because, as I've said in the last few market alerts, waiting for the market to actually show its hand, and hopefully this will be part of that, as was Friday. If you recall, I'll just drag the chart over. This was Saturday. We got that spiking again. It went through the 200 bar moving average. Always needs a lot to drive through this area, whether it's buying or selling. But on Friday, if you recall, when I was recording the market alert, the market broke to the downside. We saw this bar, and then after I concluded, the market moved sharply to the downside, and then we saw some buying coming in, and then the market just traded in a $50 range, which you can see here, just over a bit more. Price is headed towards the 200 MA there. So on Saturday, the market still below the moving average, apart from this move that we've just seen. And then moving lower on Sunday, you can see the market coming through on selling, again selling, and then just finding support. But again, very narrow range there. That's only $50. And then breaking out of this yesterday. So when it was all quiet and a lot of traders away from the desk, there's some sort of whale trading, as they call it, came in and moved the markets. But it's been quiet overnight. Again, we're back to that $50 range. So again, it'd be interesting to see how the market actually fares today, as it's now breaking out of that sort of sideways range there and moving higher. So watch for the 4-hour chart, the 200 MA in this chart. In the daily chart, we're heading back towards this as well. I'd also be inclined to watch for 76% retracement from this high to this low as well, projected back to the upside. So if we just draw this in, watch for prices at this level as well, 8576, and we'll just save this. Meanwhile, in the other markets, the Dow dumped on Friday on talc turmoil, Boeing bust, and Pence panic. Whatever all that means, I really don't know, but let's have a look at the chart. We'll start off with the Dow. We'll start off with the daily chart as well. We see prices moving lower. As I've said before, and also said on Friday, that when the implied volatility goes to the lows, then you can expect some sort of a correction in the market. We saw a bit of one on Friday, the market trying to come back on the overnight at the moment. There wasn't much in the way of selling on Friday either. So the market a bit range bound. The lower the implied volatility goes, the better. So on Friday we see the market moving lower, finding support at the psychological level of this will be 26,950, back up to 27,000. Interesting level here, because you've got a good psychological level and prices trading up to the 200 MA, failing to close above, and then making their way lower, as we see here. Once they break below the 20 bar moving average, as prices come back through, they continue lower until we get to the buying pressure bar, where the volume is greater than the previous bar, but the range is narrower. Then we get a bit of a profit-taking phase coming in here, short covering, and then some more weakness coming in, and price is stopping at 76% retracement, which I just draw in from this low to this high. You'll see the market trading down to this level and then moving back you'll also see from this level down to here, price is stopping there also at the 76% retracement and the 50 bar moving average before we get a final shakeout there for this market, and then price is gapping lower on the overnight and moving back towards the upside there. Now news. Let's have a look at the Forex Factory website for this week. And you'll see we're a bit sparse. There's nothing for Monday and Tuesday or for Friday. So that leaves us with Wednesday for crude oil inventories. Very quiet week. Thursday, main day. So the market's going to have to make its move based on Trump tweets, China deals or no China deals, and Brexit deals or no Brexit deals. But Thursday we've got ECB conference, and the interest rates, they're going to remain the same because Super Mario leaves at the end of this month, a week on Wednesday, I think, something like that. And then that criminal Lagarde takes over the job of printing 20 billion a month to keep the Eurozone afloat. Other news, implied volatility, you can see this moving to the upside as prices move lower on Friday. And again, price wise, wrong one there, it doesn't matter. So you can see it's moving higher. It ticked up a bit from around the 11.59 to 13 something. But you can see it there. This is a lot easier to see that on Friday there was a bit of concern about the down move continuing, and it could do, given the backdrop of uncertainty. 10-year yield continues to move to the upside as well, and this certainly is a reflection of the forthcoming recession next year, based upon previous year's 100% hit rate when the inversion of the yield curve occurs between the 3 and the 10-year. And Deutsche Bank moving to the upside still. And I'm still sure this is, I'm convinced it's taking advantage of the lax regulations or the changing regulations by the Fed to fund international banks as well with the repo market. And then finally we've got the pound, and we'll start off with the daily chart. This moving higher on Friday as prices attempt to move higher inside bar, and then of course the farce of whatever happened on Saturday in Parliament. The vote didn't go ahead, creating a bit of weakness, I think, asking for an extension as well. Like I've always maintained, we will never leave. They won't let us leave. They'll pull every trick in the book, and the UK will remain within the European Union. Doesn't affect me either way. I'm not really that interested, to be honest with you, because the Eurozone is already 10 trillion in debt. They've already printed 4 trillion. Let me just show you this, actually. Brilliant article, well worth looking at on Saturday. Let me just get it for you. Okay, this is the article talking about why the Fed is lying to us. Great, obviously a bit of Photoshop there. Show Powell's Pinocchio nose. But what's interesting is if we scroll through all of this and get rid of some of the adverts, is the total assets printed over 4 trillion on the balance sheet there for the Fed. They stopped printing. The markets had a major correction, and you can see they started printing again. But it's the European one here that is of interest, because when the Fed stopped printing in 2014, the Eurozone then took over, and they've printed nearly 5 trillion, and they're going to be printing 20 billion per month from the 1st of November. So it's just a matter of time. Outside of all of the political arena, the Eurozone is a failed experiment on as far as the financial system is concerned, when they'll just have to keep printing and printing and printing to keep it all together, plus the fact of the high unemployment rate, the debt in the countries under the Target 2 system. It just goes on. So all of this is in the background, and the political aspect of it is just a diversion, frankly. And this is one of probably the major reasons of us not leaving, because it makes a big difference in adding to the coffers to keep it afloat. So there you go. That's my two penneth on it. I've always been more interested in the economics of what's going on. It doesn't matter what any politician says. Without the money or the facility to print the money, then they can never honour anything anyway. Simple as that. But this is a brilliant article and well worth a read if you've got a few minutes spare. The Fed is lying to us. It's about Powell saying it's not QE. Well, it is QE when you're printing 60 billion a month and buying near-term treasuries. Whichever way you slice it, that's exactly what it is. Okay, that will do it for this one. If there is anything else to report today, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.